Some people consider trade management as a passive exercise. Set and forget is the mantra regardless of what the market is doing. Like set and forget is a huge selling feature, and it's not a bad system for those with emotional trading issues. But I think trade management should be a hands-on activity. Being hands-on allows you to gauge the strength and the weakness of the markets. In strength, you may allow a little more wiggle room on the trade than you would in conditions of a weak market. Day traders would want to be more vigilant because on the smaller time frames, a weak market can have a quicker adverse effect on your trades than if you're swing trading. Did you know that many traders will tell you that a few big trades make their year? Yes, they have the income-producing smaller trades, of course, but the runners, the wealth-producing trades, happen a few times a year. It's no secret that most traders let the losers run and they cut their profits quickly. Now, there are many reasons for that, but those that are successful will tell you that is the wrong way to run your trading business. Personally, when I'm faced with weak market conditions, I like to take a bulk of the trade-off in profit but leave something in play. Cutting the entire position goes against my buying into the few trades make your year quote. Now, this was something that was taught to me by my mentor many, many years ago. You ever talk yourself into staying in a trade due to an indicator position? You see divergence, or your MACD says the trade direction is still solid. The moving averages, they've now crossed. But you miss the actual price showing patterns against your position. You're not active in the management of the trade, and you don't see the higher highs and lows switching to the opposing pattern. The bearish engulfing candles or the pin bar candles on higher time frames, they get ignored. Personally, I like to find reasons to stay in a trade, but I have no problem tightening up stops when the signs tell me to do so. Now, alerts play a big part in my trading where I will judge price action at set levels such as former areas of support and resistance. Indicators? I use them at times, but not to tell me to stay in a trade, but to aid me in the decision to exit. I trade hoping for the best, but expecting the worst, and I manage trades with that mindset. Look, you've done the work of finding really good trading opportunities to place your orders against. Now, sometimes they will reward you with fast profits, and you owe it to yourself to see if this trade is the one that can make your year. Those trades do happen, and it would be a shame to not be along for that ride.